Do you personally expect a recession?
I am going to defer to my economist at this point, but I think probably that's a likely outcome.
Mm-hmm. Yeah. Because markets, I mean, when you see a 2,000 point decline, it sort of feeds on itself, doesn't it? Because it makes you feel like you're losing money in your 401k, you're losing money in your pension, you got to cut back.
Yeah.
This is the unemployment report where we understand the upcoming recession, which is still 100% guaranteed. It is April 12th, Saturday. I'm Samuel Shanaiki reporting from Berlin, Germany. Wait. Trump pulled back the tariffs. The stock market went up. You don't know what you're talking about. Just admit you're wrong, okay? Sure, right. So today I was planning on talking about who was going to be affected, who was going to lose their jobs and become unemployed. But obviously this week had different plans. It's just been crazy. So instead, what we're going to be doing today is understanding the sequence of the last week, what are the craziness, and why the recession is still on for 2025. And if it's all right with you, the way I want to structure this video is kind of like Dante's 9 circles of hell, right? We'll start at the top, very broad. Everyone should be able to understand it. But by the end of it, we've gotten into such details that I don't know what's going on anymore. Cold sweat, just swimming in a word soup. Let's do it like that, yeah? Okay, starting from the high level sequence of events of the last week or so. So April 2nd, Trump announced Liberation Day, which was a historic shift in American policy, which included a 10% blanket tariff on all countries, and then some additional tariffs on countries that we feel are treating us poorly, countries like China, Vietnam, and the Norfolk Islands, of course. So this was basically the worst case scenario. And in fact, worse than the worst case scenario, like people couldn't even imagine that this was going to be the announcement. And it guaranteed not only a recession, but probably even a depression, if not worse, something we don't even know what could have happened. So in the days following the announcement, we saw the stock market basically crash. And we were all wondering, is Trump going to respond to this? Is he going to kind of bow down to the pressure of the stock market? And every indication looked like Trump was going to stand 10 toes down, super tall. There was no indication that he was going to back down whatsoever. And that was all until Wednesday. On Wednesday, something changed. And that what changed was the bond market reacted. And we'll get into that later in the video. But the bond market reacted very negatively by raising yields. And that is what made Trump blink. So on Wednesday, he announced that he's pulling back all these tariffs, back to the 10% level, everyone who played nicely. And for mean old China, the tariffs stand at now, I think it's 134%. In doing this, Trump pulled off like a really amazing trick. Magic trick right before our eyes. The whole world breathed a collective sigh of relief as he took the bazooka pointed right at them and put it away while the gun was still pointed at them. So after a day of euphoria, however, people came back to their senses and realized that what remains from the announcement is still monumental, historic. 10% blanket tariffs on everyone, and a full-blown trade war still ongoing and escalating with China. And that which remains is exactly what guarantees the 100% recession at the moment. So what's next? It looks like Trump and China will probably make a deal. This isn't going to continue to spiral on. There has to be an end at some point there. And bring the tariff levels back down from full-on insanity levels. And still, all the other tariffs will remain. And if somehow he decides to back off from the overall tariffs, which he won't, but let's just say if he does, it won't matter because the damage done by this announcement and by these actions has already undermined and called into question the U.S. as a trading partner and as a respectable in terms of their respect as a trading partner and their trust. And there's no going back from that. Okay, so we covered the high level of what's going on. Now let's get into the weeds and ask two big questions that are fundamental to really understanding what's going on here. So first question is, why is the bond market so important, and why was that what made Trump react? And the other side is, why is Trump doing this at all if he knows a recession could come from this? Okay, with bonds, it's very complicated, but to simplify things a lot, there are a few people in the world who control everything in a way. It's not a conspiracy. We live in a capitalist society, and money is what controls things more or less. And a few people have a lot of it. In fact, most of it. And maybe it's not individuals, but it's a few organizations such as BlackRock, Apollo, Bridgewater Capital, which is Ray Dalio. So these people are disproportionate controlling the world. And that's not necessarily a bad thing. A lot of them are reasonable, responsible people in a way. And so their opinion really matters. And what do they do, right? They have all this money and they have to decide what to do with it. And a lot of them, they're responsible for our money, for example. If you have money in a retirement fund, it's probably being controlled by one of these individuals or one of these organizations. So they need to act responsibly with our money. And so they need to make decisions on where to put our money, right? And they could put it in equities, which are stocks. They could put it into gold. They could buy gold, literally. They could keep it in cash, just put it under their own mattresses, let's just say. But usually what they do is they put it into bonds, right? Now, a bond is like a loan, right? So who mainly gives out these loans, or who mainly gives out these bonds, right? Normally, it's countries and also corporations, right? Now, they give out bonds because they want money. It's an exchange, right? They sell the bond and they get back money. It's a promissory note. It's like debt. So they sell debt, right? So let's say I'm like a business, right? And I want to make a factory. So I don't have all the money I need. So I'll go out there, hey, can someone give me the money right now so I can make the factory, right? So I go out and I'll ask people. And then Bridgewater, Ray Dalio, I'll say, hey, please give me the money. And I promise that, I'll pay you back in 10 years. And also in the meantime, I'll give you 5% on top of that every year, just because as a risk factor, right? Just to make it worth your time. And that's basically what it is. That's a bond, right? So I give them a bond, they give me money, right? And then in 5-10 years, I need to have the money fully back to give it to them to pay back the bond. So why is that so important, or why is that so great? Because people like Ray Dalio or Bridgewater or Apollo, whatever, they love bonds because they're pretty risk-free, or they're lower risk, right? The chance that something's going to happen, that business isn't going to pay it back, is pretty low. So it's a good way to at least get some money back on their investment, but they don't have to put up too much risk. So it is a lower risk opportunity. It's a good, safe place to put their money, to put our money, right? So in a very fundamental way, these people who control all this money, to have a big decision-making authority. And if they decide, I don't trust you, I'm not going to buy your bonds, I'm not going to loan you money, then they can make you change your whole mind, right? So if a government like the US just says, hey, I need to raise money to, I don't know, buy a military or do all sorts of things, and no one wants to buy that debt, if no one wants to give you money, then that's a big problem, because we need money to do things on a day-to-day basis, right? So this is what people call this idea of a bond vigilante. This is a really technical term. Bond vigilante, like Batman, right? A vigilante. These bond vigilantes like Ray Dalio and all these other people that have all our money, they are the vigilantes because they're the ones who, when no one's watching and no one's paying attention, they're the ones who are going to say no when like a company or a country, let's say, starts asking for money and they don't deserve it. And then the bond vigilantes come in and say, okay, look, yeah, I'll give you money, but I don't trust you anymore. So instead of 5%, you need to give me 10%, or it's not that drastic. Exactly what happened on Wednesday was more like the rate went from 4.2 or 4, but then it quickly rose to almost 5, right, on the 10-year US Treasury note. Now, that doesn't seem like much, but in a short term, that is huge. Like, you don't see those kind of movements they haven't seen these kind of movements for like 20 years, 30 years. So it is huge, right? But the idea is the same, right? It's instead of I'm going to give you this money at a 5% interest rate, it's going to be higher, 10%, 20%. It's just like a credit card, right? If you had a credit card and you have a 10% interest rate, that's easier to manage with. You can pay off the debt more manageably. But if you had a 20%, 30%, 40% interest rate on your credit, that means that every month that you have to pay the interest on it, it becomes really difficult. And in fact, at some level, it becomes impossible to pay it back because the interest on the debt itself is more than you're making, right? And so that is exactly the position that the US is in right now, or that was a signal that was being sent, is that literally all these people, these bond vigilantes, the people that have all our money and control the world more or less, they looked at what the US was doing and said, I don't like what you're doing. I don't trust it. It sounds irresponsible. You're going to need to pay me a higher interest rate for me to trust you with my money. Because I don't know if you're going to pay it back, or the other side of it is inflation. Because of the act, it's not even maybe a trust issue. It's more of an inflation thing. So tariffs cause inflation. We discussed this before. As you cause this tax on goods, then it means that those goods are more expensive. That's inflationary, right? That causes inflation. So if inflation goes up, now this is complicated, but if inflation goes up, that means I also need more promise on my debt, right? Okay, so let's take like an example like this. Let's say inflation was 5%, which is higher than where it is now. Let's say inflation's at 5%. But then I give you a bond for 5%, right? At that point, I'm not really making money. It's like, when you give me 5% every year, I'm just meeting the inflation rate. So that's not really great. Maybe I'll try and find a different investment that promises me like 7%, so that I'm actually making a little bit of money, right? Because inflation is eating my money, right? It's eating my return. So what you can do there, or what they are forced to do, is then say, look, hey, inflation's 5%, you have to promise me 6%. So that's exactly what will also rise the interest rate on the Treasury notes, is because they have to promise a higher level of return to make investors say, hey, look, this is a good, or like I said, the bond people, to convince them that this is a good idea to put their money into the Treasury so it'll still gain value. So there's that cycle also to deal with. This is also why the mortgage rates are raising, right? Even though we're looking, maybe there's a recession. Normally you'd think if there's a recession, then interest rates should come down, mortgages come down. No, if you're promising inflation, like I just described, that forces the Treasury interest higher and mortgages move with that. So even if we fall into a recession, it looks like based on these bond vigilantes need a higher risk premium. They need a higher interest rate, but also because inflation is also going to drive the interest rates higher. You're also going to see the mortgages rates increase, and we're already seeing that. So that's kind of the mechanics of how bonds work, why these few individuals are so powerful here. We've seen it very recently in the UK in 2022 with Liz Truss. That was that whole debacle where she announced some horrible financial decisions, and then the bond market, these bond vigilantes, punished her very quickly, and then she resigned quickly. Obviously, that's not going to happen in the US. We have a different political system, so it's going to happen a little bit different with us. But we saw exactly what happened, which was that Trump went from like a volume of like 12 and he took it down to 8, but actually it's still basically a 10 volume at the overall level of tariff rates. But let's go into something even more like philosophical, which is, so why is Trump doing this if he knows it's going to cause a recession, knows it's going to be painful? Why? So there's a lot of reasons why. One could be because he can. He is a person who understands power. He knows how to wield it, and that is how he likes to operate, right? That's a valid reasoning. But I actually think that there is a true ideological, philosophical reason for this, which is that Trump and a lot of people really don't believe in neoliberalism. They think that neoliberalism was a bad idea. So what is neoliberalism, and why is it a bad idea? Right? Neoliberalism is basically what's been going on since the 80s. Started. Most people say Reagan brought in this, but maybe it started even earlier than that. But it's free trade, right? Neoliberalism just means free trade, free movement of goods, free movement of capital, free movement of labor, right? It's supposed to be. And what that did in effect, we'll just talk about what it did. It really made corporations great. It allowed corporations like manufacturing companies go to places like China, especially China, Vietnam, Malaysia, all over the place where they could find cheap labor to make things, and then they can import them back into the US to sell them at a huge profit. And in effect, what that did was it made a lot of money for corporations and people who worked for corporations, myself included. But at the same time, anyone in the US who was working in a manufacturing job, they got completely hollowed out. So places that were making shirts, places that were doing car manufacturers. I mean, this is why Detroit, the Rust Belt, all of these stories, true stories, horrible stories of communities being decimated. That is what happened, and it didn't have to happen that way. Let's just be clear. It could have been a win-win situation because everyone who knows economics understands that when you have a trade, there are winners and there are losers. That's totally true. Now, the winners in that situation were corporations and the people that worked for corporations. So educated people, college-educated people, and even the countries from abroad, right? It's always characterized that it's this China versus US thing. It's not the case. There were many countries that benefited, China including them, from higher living standards, more money from this. So there was a lot. And I won't even get into the whole dollar recycling thing where they were buying our debt. That's just too much. I'm not going to go there. But generally that system worked. But who lost? Who lost? It was a lot of Americans. There were a lot of Americans and people around the world who did not benefit from this free trade, who were punished because labor doesn't really move freely, right? Capital doesn't really move freely. And goods don't necessarily move freely. But, for a while, consumers had cheap goods. So that is the system that Trump doesn't want to continue. And there's a lot of people that agree with him. And, I think that there's a lot of arguments to say that it needed to change. There's people on all levels of the political spectrum that say what neoliberalism brought wasn't all good. And so this is a response to that. What he is doing and what he will hold to do, because I really don't think these tariffs are coming back. He means to completely flip this world order from neoliberalism, free trade to economic nationalism, meaning America first. We're going to build everything here as much as we can, and every other country should do the same, right? He wants to close off. Now, the thing is, it's not going to work like that for other countries. We see that other countries are continuing to benefit from free trade. Maybe they are going to have some protectionist measures, but generally, countries realize, okay, we need to be able to build our own things, have our own capacities, industrial capacities. It's important. And by the way, it's important that the U.S. does have industrial capacity. It does have the ability to create semiconductors. It's important that it has the ability to have educated people build its own things, have self-reliance. All of that is good, and no one should disagree with that. However, what is being done is not exactly that, and we'll see if it actually achieves any of those goals. What we have here is a broad-scale disruption of a system, and we have unknown consequences from these actions. That's what we have. So if I want to kind of wrap this in a bow and say, we're entering a new world order, that's for sure. So if you want to kind of see where you're oriented in that system, are you in a corporation? Do you work for a corporation that imports things or has a supply chain where it relies on free trade? If that's the case, you are going to be seeing a big impact. Things are going to change. I would say profit margins are going to come down. There are going to be a lot of cutbacks on the corporate side of things, right? So I think corporations are going to be the big losers. The timing of things, I'm not giving any stock advice because the timing of things I always get wrong. But that is the long-term trend, right? Are you a local producer? Are you producing things locally? You probably are going to see a benefit, right? Do you export? You're probably going to see a benefit. Again, the timing of things is going to be very difficult. I can't say that. I think a recession is going to kind of hit everyone, but there are definitely going to be winners, but there's going to be a lot of losers. So you personally, based on your job, you should evaluate, what is your job position, and how much does it benefit and rely on free trade? Because that world is over. On April 2nd, it was over. It's still over. We're not going back. This is the new world. How it plays out and the sequence and the timing is anyone's guess. And we're going to be looking at this weekly to see how things progress. But that is roughly how to look at the new world. And we are going to see. So thank you so much for staying around and watching, listening. I appreciate it. And we will be back when more information becomes available. Thank you.